Happy New Year. This is Cynthia Fick, and this is your January 10th, 2023 stock market update. Hope you guys had a wonderful holiday with your friends and family. And now we are getting back to work. So let's do this. Want to start off with a look back at 2022, and I will say bye-bye happily to 2022. So let's go straight to the charts and look at how it really looked last year. And get ready. This is more like an autopsy than anything else. How bad was it last year? Well, I think we all knew, but here, let's look at the numbers on this. This is a chart. I'm going to make it a little bigger for you of stocks in general, how much they were down. You can see that there's many stocks, Salesforce down 47%, Amazon down 49%, NVIDIA down 50%. We had companies like Disney down 43%, Ford Motor down 42%. The NASDAQ was down 33%. 20-year Treasury bond index fund was down 31%. There literally was no place to hide last year, and I know that we all felt that. This is just an idea of how bad it got. The average stock was down 37.85%, and the median down 35.37%. The S&P was down about 20%, just to put it in perspective. So let's look at how bad 2022 was for just, the stock market in general. This is a plot graph. It was a terrible year for both U.S. stocks and bonds. There was truly no place to hide. And if you look here, here's 2022 on a plot chart of the stock and bond markets going back into the 1800s. And you can see it was truly one of the worst year that we've had. There's been other years where stocks were down more. This is the bonds, and this is the stocks. So stocks have been down more, but not at a time when bonds were down almost as much. So again, congratulations, you lived through one of the worst stock markets in my career in going back to 1870. So what does it look like right now? I'm going to offer you a teeny glimpse at what the future might hold based on how bad 2022 was for both the stock and the bond market, because we do have a few glimmers out there. I've said over the last 2 months, I've been saying that when you have a bear market, which we started in January 2022, you add the potential for a recession. And, we could have had 2023 shape up to be down to the 3200s on the S&P 500. And historically, that all kind of bottoms out in about 16 months from when it started, which is January 2022. So that would be the end of April if we have a bear market and add a recession. Okay. The first week of January 2023 is what has given me a slight amount of hope. And because the internals of the stock market have shifted a tad. And it looks like we may try to rally this market. A significant rally could start tomorrow. It could start in February after the Federal Reserve meets again. It could start at the end of April. Not sure, but here's what's happening and why I'm offering this glimpse of hope, or the light at the end of the tunnel. What happened last week that made a big difference? Well, one of the Federal Reserve Board members, Bullard, said that the prospects for a U.S. soft landing are rising, even though they've been very clear. We're going to be tough on inflation. We're going to keep on raising interest rates. They're also coming out now with a little bit softer speech, basically saying that they think we may have a soft landing, which is something we have not heard. This just happened on Friday, and that's one of the reasons the market was up so big, okay? And helped to start changing the internals of the stock market. Let's look at this chart. Inflation has, in fact, really dropped drastically. This is a chart of the U.S. Manufacturing Prices Paid Index. It shows us part of inflationary numbers that we looked at. In 2022, this index was up at 80. It's now at 39.4. So it's gone down by about half, and that is a pretty significant manufacturing number on actually the prices paid for goods. So what happens to a stock market after we have these kind of numbers? There can be, some further drawdown. There most certainly was one in 2008, 2009. After this happened and this prices paid index went under 40, the stock market was still down 30%. But look what happens going forward. In the years, 1 year after this PPI number drops so drastically under 40, in 1952, the stock market was up 2.85 in 1 year. 3 years, it was up 58.89. Let's go to 2008. The stock market within a year was up 6.96. And in 3 years, 29.37. The average increase in 1 year from when this number happens is 16.28. In 2 years, it's 35.24. In 3 years, it's 52.45%. So this happened. Inflation is truly bottoming out. I think interest rates are starting to come down, which is another sign that they're looking forward and seeing that, they brought inflation down. The economy has definitely slowed down, hopefully not to the point where we have a hard landing, but Bullard said looking better for a soft landing. So here's the final thought. As I said, we could have that rally. A lot of people say, well, Cynthia, why didn't you put us more into cash? We raised cash, we got defensive. Because we don't know exactly when the market is going to turn around. And that is more risky than going 100% cash. If you go 100% cash, that's more risky than having some stocks, leaving some stocks. And the reason is, I love this quote, Thomas Edison: opportunity is missed by most people because it is dressed in overalls and looks like work. Well, that's what I said. We're ready to get to work. Again, I don't know if it's going to be next week, February, the end of April, or a little bit later in the year, but at some point things are on sale. You saw those numbers and how much things are down this year so far. When do most of us want to buy a house? When it's down 40% or when it's up 30%? We all fall asleep and tend to think that something that's going up will keep going up and something that's going down will keep going down. I've been having this conversation all the time with my clients here in Arizona. Right now, this morning, I got up to go on my walk at 7 a.m. and it was 41 degrees here in Phoenix, Arizona. So it's 41 right now, but I'll remind people, don't forget last summer, it was that we had 90 days over 100. Do you remember that? No, don't remember that right now because it was 41 this morning, but this too shall pass. Just remember that. Yes, unfortunately, people in Arizona, it will go over 100 next summer. I can kind of promise you that. And same thing with the stock market. So stay tuned. It's about to get exciting. We're just waiting and watching what the market is showing us and wants to do. And last week there was a slightly more positive everything I look at. I will keep you up to date and I'll see you next Tuesday. Have a good one.